Wednesday, April 17th, 2024, Maneco 64, home of alternative economics and contrarian views. Many of you have been asking me, I've seen in the comment section, someone recently did a video about using gold and silver for payment and crypto. In Argentina, I think it was George Gammon. He didn't have a very good experience with gold nor Bitcoin, maybe a little better with silver. We can safely say that Argentina is in a hyperinflation still. So that's what we're going to look at today. How gold and silver fare, not just as a means of payment, because that's what George Gammon is doing. He's doing an experiment with those three different media of payments, not as a store of value. We're going to look at it as a store of value as well. They're completely different things, I would say. And we're going to look at $3,000 gold, which doesn't seem very outlandish anymore. I even see that bullion banks like JP Morgan are predicting it. Even Bank of America. I see Goldman Sachs has a 2,700 target. So I'm going to talk about that too and give you my 2 cents on where gold could go in terms of fiat currency. In a hyperinflation though, gold becomes unobtainium, if you want to call it. We won't be able to get gold or silver anymore for that matter with the currency. So let's start with the Argentina experience George Gammon had. Look at my experience in Brazil growing up in the 80s. We had hyperinflation there. But before I do, just wanted to let you know that if you're interested in keeping your treasures safe, you should maybe think about burying some of them with a dirty man's safe. And right now they've got a special deal where you get 10% off if you click onto my affiliate link in the description. And I think you get a free gift as well, the dirty man's safe. And back to hyperinflation. And I've been calling it for years, hyperinflation. And there's someone else that used to call for hyperinflation. Unfortunately, he passed away. I remember reading it on Zero Hedge back in 2010, 2011. That was Gonzalo Lira. Unfortunately, he's been a victim of war. But I've been covering it for 7 years on this channel. And I even have a hyperinflation files. And I've been fortunate enough to speak to a couple of guys who have more recently experienced it. So one of those guys was Star Path Academy. So I've got at least one video with him, and it's entitled, and it's from over 2 years ago, How to Get Through Economic Collapse and Hyperinflation, chat with Star Path Academy. And he grew up in the 1990s in post-communist Romania. He's now in the States. And he told me, and I highly recommend you watch these videos with him. I think it's more than one. But anyway, he told me that community was the most important thing, helping each other out. And in terms of gold and silver, yes, his family did have some gold, not silver, but they tried not to touch gold, because once you get rid of your gold, it means you're desperate in a hyperinflation. And the other thing he told me that's really important about a currency collapse or hyperinflation, and this might have to do a little bit with George Gammon. Apparently he got some really bad prices for his gold. His silver wasn't as bad. Well, if you think about what hyperinflation or currency collapse is. It's a currency on its last legs. It's a currency that one day is worth so much and the next day is worth 100 times less, and vice versa. Very volatile. So you're not going to get the true value of your gold or silver during a hyperinflation. So that's what Star Path Academy really pointed out that is important. But he thinks if you and your family can keep a hold of your gold and silver, they're timeless. They will always be there on the other side of the collapse. And you will do a lot better than most, because most people's savings, which are usually in the dying fiat currency, will be wiped out. Yours won't. So maybe not a great means of payment during a hyperinflation for gold and silver or anything really, but definitely something to hold on until after the hyperinflation. For the countries in South America, having grown up in Brazil and experienced briefly the hyperinflation in the mid-late 80s, I would say back then, I never heard anyone talk about gold and silver. And why is that? Well, because the countries of Latin America, they gave up on sound money a long, long time ago, probably towards the end of 19th century, maybe beginning of the 20th century. So it's not even in their psyche, gold and silver. They've used the dollar. Everyone in those countries thinks the dollar is as good as gold, believe it or not. But now that the dollar and all other fiat currency are going, I think people in those countries will have to kind of wake up to the fact that they might need to start looking at alternatives. And by that, I mean gold and silver. So I think it's the same thing in Argentina. I haven't been there, but the dollar has been really the currency that people go for, not just for payments of for buying property, but also for savings. They don't keep pesos. But what happens when the dollar goes too? That's another question we have to look at. There's another guy that I interviewed that is really interesting. It's a guy from Lebanon. They've had hyperinflation the last 4 or 5 years. And he pretty much said what Star Path Academy said in his interviews, that, you just try to get as much of the local currency as possible. Getting dollars, even dollars, is very difficult. Gold and silver as well is not something that you use day to day. Barter, community, friends. That's the most important thing. So, I highly recommend you go through my videos in the hyperinflation file. I think they could help you. And I've got a couple of books as well that could help you try to understand what could happen in a hyperinflation to gold and silver and in general. And what do I think the chances of a hyperinflation are? Well, I think they're great right now. They're at least 50%, I would say. And why? Well, because our system is so inundated with debt, our financial system, our currency system, that if the powers that be rein in the inflation or rein in the currency production, they will collapse everything. And I don't think politicians, central bankers want things to collapse, or else they'll be in trouble. They'd rather have inflation than a deflationary collapse. That has been the norm. What that does, though, it could trigger psychologically and very quickly a mindset where people realize this currency is worthless. I need to get rid of it for anything really that has some value whenever I can. And that's when it kicks off. But anyway, the first book is The Mandibles, I've recommended this recently. I read it about 5 years ago. It's about a family in the US that goes through a dollar collapse from 2029 to 2047. And there is an important part about gold in this as well. But I'll let you read it and find out. And I can tell you, if you buy this book and start reading it, you won't be able to put it down. So it won't take you too long to find out. The other one is When Money Dies by Adam Ferguson. And it's about the hyperinflation in Germany and Central Europe in 1923 or thereabouts. And one thing that's interesting here about gold is that the dollar and sterling at the time were still as good as gold, especially the dollar. And I'm not sure if it's in this book, but I've heard of a story of American tourists who gave a young German guy a $20 gold piece, a double eagle. And with that, he was able to start his own little hotel business. Yes, so it went a long way having some gold. So he didn't use that to barter for basic necessities. That was real wealth, 1 ounce of gold during hyperinflation. And it shows you, yes, the dollar or the $20 gold piece was great to have. Tourists flocked to Berlin during that period because they could get real good entertainment, great hotels and food and everything for very little dollars, because the dollar being as good as gold went a long way versus the paper mark. But what about the average German? Well, they struggled. One group of Germans that didn't struggle that much were speculators, because they knew what was going on, and also farmers, because farmers had real goods. They had something of value. So I hope that helps. I'm sure there will be a lot of questions, and if you do have questions, maybe drop them in the comment section and I'll try to go through all of them. My recovery is going fairly well. I feel a lot better after surgery, but it's still very sore around here. It was a keyhole surgery, but it still feels pretty sore. I think it's going to be a matter at least another month until I'm 100% again. And let's quickly go through this $3,000 gold. I've seen that a lot of the bullion banks or big US banks have come out with predictions for $3,000 gold. That's JP Morgan, I think Bank of America as well. Goldman Sachs, 2,700. So what do I think about those? Well, I tend to agree with Goldman Sachs. 2,700 will be a very key resistance, at least this year. And why do I say that? Well, because of this chart here and this trend line, as you can see. This chart is a logarithmic chart going back to just before the dollar went on a fiat currency system in 1971, and it went floating against gold. And the trend line that I have takes the top from 1980 and the top from 2011. And this year, that top is around 2,700. So that's why I kind of agree with Goldman Sachs. Is that going to be the all-time top? I doubt it. The timing, of course, is very important as well. So 3,000, I think, it's going to be tough. But if we break 2,700, I think we'll blow right through 3,000. That's what I mean. So I tend to think Goldman Sachs has the best forecast because we might see a correction back down from 2,700. What about longer term? As I said, in a hyperinflation, it doesn't matter what the fiat price of gold or silver is really, because you won't be able to get any because no one wants the paper currency. People are not going to be selling or exchanging their gold and silver for a currency that is collapsing. So, it's something that is irrelevant, the price. You have to look at it more in terms of value, what that ounce of gold or gram of gold or ounce of silver or kilo of silver will get you. But there is another alternative, I would say, and that's if for some miraculous reason the powers that be, the central bankers and governments, are able to basically put a brake on the collapse of the currency, and maybe we have something in between. We get through that 3,000 or 2,700 level, and we just see another leg up, like we've seen since 1971, another major leg up. And that is possible as well. And by looking at the 71 to 80 leg up, that's just over 8 times from 35 to just under 900. And then the second major leg up was from 2001, from 250 to 1900 in 2011. That was just under 8 times. And if you take the bottom in late 2015, just above 1,000, and you multiply that by 8, you get 8,000. And I would say if they're able to manage that kind of move, that would probably be the best thing that could happen for society. So, because if we see gold and silver unobtainium, where the currencies can't even buy gold and silver, then we're going more towards a Mad Max or Mandibles world. So there you go. Let's quickly look at where the markets are then this morning. It's 8:20 a.m. London time. We got spot gold at 23.80. It's down about $2. High's been 87, low 72. Silver is catching up a little bit after underperforming yesterday. It's up 25 cents or just under 1%, 28.35. High's been 44, low is 05. Dow futures is up 19, NASDAQ down 19, S&P unchanged. The currencies are pretty much unchanged, with the exception of the pound is up slightly today. It's up 0.25%, 124.58. We had some economic data in the UK. The CPI, if you believe it, as a measure of prices, that went up 3.2%. It's expected to go up 3.1% on the year. The old RPI, which is a much better indication, that's still around 4.3%. Maybe that's why the pound is up slightly a little bit. What about the other currencies? Yeah, as I said, they're pretty much unchanged. WTI crude is kind of calmed down as the situation in the Middle East kind of, the tensions kind of abated. WTI is at 84.60, down a third. Brent is at 89.25, down a quarter. High-grade copper is up 0.4% at 434. And let's have a look at the bond market. I saw that the 10-year yields continue to go up yesterday. Right now, we are unchanged at 466. So, with that, I'm going to wish you all a very good day. Take care. Bye.